this table gets seated. This table does not. This table does not get seated. This table does get seated.
People get seated checkerboard style. Only every other table can be occupied. The bar can accommodate 4 people instead of the usual 20. Like in other restaurants in the nation's capital, this venue can operate at only 50% capacity for indoor dining. That means profits get cut in half too. That after the restaurant was fully shut from March to June.
We laid some people off, we furloughed some people that went and got unemployment compensation, and now they're back. So we've got almost everybody back.
Owner of the restaurant Medium Rare, Mark Boucher, says the pandemic cost him hundreds of thousands of dollars. To try and compensate, Boucher got in touch with his insurance company, hoping the $25,000 he paid in insurance would pay off.
We, like many responsible business owners, filed a claim with our insurance company saying that our business has been interrupted due to circumstances beyond our control, and we're going to seek to the insurance company for reimbursement of lost sales and profits under the wording of our policy. It didn't take very long to get a letter back saying we're denying your claim. A pandemic or a virus is not a covered cause of loss.
Insurance companies changed their policies after the SARS outbreak that hit the world in 2002-2003, when insurance companies had to pay millions of dollars in compensation. Some added straightforward wording saying they're not covering losses because of a pandemic or virus outbreak. Others found more intricate wording, but to the same effect. Yet, independent experts say it all depends on how to interpret the contract.
That's the thing. If they're requiring physical loss only, then you're kind of stuck. But a good business interruption policy shouldn't have a physical loss requirement. Some of them, they don't have a direct physical loss requirement, but they're still using it anyway. They're adding it in as if it was there, and it's not.
However, insurance companies explained that the new policies were not adopted to get out of paying. They're simply trying to preserve the insurance industry. The U.S. has never seen such a massive disaster. The largest one before the pandemic was Hurricane Katrina that cost insurance companies $54 billion. The COVID-19 pandemic, according to the American Property Casualty Insurance Association, has led to monthly losses between about $250 and $430 billion monthly. This is more than half of all the money insurance companies have for covering future losses.
If a pandemic is specifically mentioned in the insurance contract, the number of insurance claims will be so large, it will surpass the amount these companies can pay.
Insurers say in a case like today's, it is the government that should support small businesses. Small business owners, on the contrary, are urging the government to change laws, making it impossible for insurance companies to evade paying in extraordinary circumstances like the current pandemic.